So good morning, everyone. Welcome to the Friday morning plenary. People are trickling in. I guess this is an important topic now, huh? So for those of you who were at the awards ceremony last night, they announced the theme for next year's awards, and it is, ta-da! I don't know how much of a coincidence it is, or just well, this is thoroughly planned. The secretariat keeps telling me, no, it's a pure coincidence. We had no idea. Anyway, here we are, and it's an exciting time to start to delve into a really important issue. Because obviously we're going to be talking about this, well, for probably a long time, but certainly within this community for the next year, because it's going to lead up to the awards for 2024. The topic, oh, maybe I should just tell you who I am. Yeah, my name is Craig Churchill. I work at the International Labor Organization in Geneva. And the ILO has been working on this agenda for a good number of years, and happy to try to share some of the experiences that we've had over the years. But this is an interesting agenda that revolves or involves many different types of stakeholders, many different types of players, and the panel that we have here reflects that. And when you think about this issue, you might think refugees, forcibly displaced people. I don't know what images come to your mind. To me, it's like tents set up, Red Cross or UNHCR banners next to it. It's like, well, what does that have to do with banks, right? And so that's hopefully the myth, or maybe it's not a myth. Maybe we're hopefully be able to create the narrative to explain and illustrate how we get from the tents and the Red Crosses to financial inclusion world. And I think it's recognizing that financial inclusion it's a tool. It's just one instrument that we, and people in this room, have some expertise with. And we use that tool to achieve a lot of different objectives or outcomes. And if you look at the themes that the European Microfinance Platform has launched over the years, it's always microfinance for what? This year it was for food security. A couple of years ago it was for health, gender. So it's just a number of different agendas. It's not financial inclusion for financial inclusion's sake, but to achieve a certain development objective. So it's an important tool, but every time you're trying to use that tool to achieve these different objectives, you need to adapt it. You need to use it differently. There's different levers, different ways in which that tool might be relevant or effective. Sorry to cough into. And so that's the sort of the purpose, what we're going to try to explore today. So I've got a really cool panel, and I'm going to let them introduce themselves to you and tell you a little bit about the organization that they're working for and what that organization in particular does for forcibly displaced people, for refugees, how it engages with them in the context of financial inclusion. And one sort of concept to keep in mind is this idea of creating a bridge from relief to development. And I think that may be what the building bridges is there. It could be building bridges between the different stakeholders involved that need to be there working together in order for this to have a positive outcome. But certainly building the bridge from relief, from the tents and the Red Cross, to how we can move into the development phase and sort of help refugees, forcibly displaced people to be able to restart their livelihood somewhere else and become financially and socially integrated wherever they end up. So that's sort of the narrative. Let me start with the other gentleman on the panel, Ashraf from Pakistan, from Research and Development Foundation, that has been involved in supporting people in Pakistan who've been displaced by the floods. So Ashrak, if you just tell us a little bit about your organization and the experiences with the internally displaced people, the flood refugees, climate refugees.
Yeah, thank you, Craig. This is Ashfaq, as Craig has introduced me. I work with a national organization. It is a not-for-profit organization working with climate refugees, climate-affected people, and particularly in rural and semi-urban areas of Pakistan. We provide them a number of services, but we focus on integrated humanitarian response, in which actually the financial inclusion is just one tool to make them self-sufficient. We provide them conditional and unconditional cash grants in order to absorb the shocks and maintain the food security while being in the camps. Unconditional cash grants are mainly transferred to the women and orphan-headed families because they are the first victim of any climate-induced disaster, and since they live in the camps, so they need some financial money in hand to survive while being in the makeshift. And conditional cash grant is basically meant to help them rebuild their infrastructure schemes, housing, so that they should not look at the external assistance again if a disaster comes or hit them. So these are some of the things. And together with these financial services, we in the longer run, when it comes to the development, we link the affected people or refugees with the microfinance institutions so that they can borrow the loans and other services from productive service providers so that they can rebuild their livelihoods, assets, and become self-sufficient. We established some protection centers as well, some protection facilities where we settle women and girls, children, so that they can be engaged in productive and recreational activities, because we believe that the women and children are the first victim of any disaster that hit them.
Okay, great. Thanks, Ashrak. So Hanadi, you're next. Green Credit Agricole Foundation, a social investor.
Social investor, exactly. We're an impact investor. My name is Hanadi. I come from Grameen Credit Agricole Foundation. Why Grameen and Credit Agricole? Because it was created as a joint initiative by Grameen Trust and the group Credit Agricole of France. So we do impact investments and we do technical assistance as well. I am part of the technical assistance and partnerships team. Why this topic? Because one of our core values is innovation and just crossing the boundaries, pushing the boundaries of financial inclusion to get to more fragile populations. Refugees are part of the fragile populations. And on this topic, we've had a successful pilot, let's call it in Uganda, in partnership with UNHCR, actually, to work with financial service providers on providing services for refugees and host communities. Every time we talk about refugees, we have to talk about the communities that host them, of course, and not only the refugee part. And this went for, it's ending now, actually. And it's the reason we created this is because we wanted to prove that there is a business case, there is a market there. It's not only the humanitarian part or project after project, there is a sustainable market there if we know how to tackle this market. So what we have done is we used our two strengths, which is the impact investments. So we gave loans to microfinance institutions, but at the same time, we provided them with technical assistance to build their own capacity, to adapt the products, because you don't really need new products, just to adapt those products to go into the areas where refugees are settled, so the settlements. And this was a generous contribution from SIDA, the Swedish Corporation, because they also wanted to take this risk, let's say, to explore this new market with us and with UNHCR.
Okay, great. So we've got an example of somebody on the ground who's supporting this process, an investor who's working with the financial institutions themselves, and now Miriam, you're with the Alliance for Financial Inclusion. So you work with central bankers, financial policymakers. What is their role in this agenda?
Well, thanks, Craig, and a very good morning, everyone. Thanks a lot for coming to this panel, actually, which is very close to our hearts. Before I get into what exactly central bankers do, just a bit of background on AFI itself. So AFI, or the Alliance for Financial Inclusion, we are a network whose membership comprises of more than 80 financial regulatory institutions, aka central banks, and ministries of finance that all have the agenda to advance financial inclusion within their countries, while also pursuing their traditional mandate of maintaining financial stability and financial integrity. And by financial integrity, I'm referring to anti-money laundering, countering terrorist financing, and countering proliferation financing efforts that the central bank usually has to take forward for us and our financial systems. And this is very important because of what I'm going to share later on how we work more specifically to adjust policies so that they are more inclusive for FDPs. And we work with our member institutions to develop and implement financial inclusion policies that address the country's specific challenges. So it could be the financial exclusion of FDPs, and to make sure that we are addressing the most disadvantaged segments of all our societies, including FDPs. So the role of the financial policymaker and regulator here, we think, is very important. 7 years ago, when we first established our work stream, it really wasn't clear what the role of the financial regulator was. At that time, we were thinking that the line ministry dealing with FDPs was the one responsible to ensure their economic empowerment. But then we did a lot of consultation with different stakeholders and the central banks themselves. And finally, we realized that they have a very important role to play in creating that enabling policy and regulatory environment for the market players, for the humanitarian stakeholders, and to ensure that all our efforts are sustainable and responsible, so that when a product or a humanitarian organization with a cash transfer program exits, there's still a policy and regulation to ensure that they are not forgotten or marginalized. But I'll speak to that more in more detail later on.
Great, thanks, Miriam. All right, so the person on the ground, the investor, the policymaker, central banker. Now I want to introduce Suzanne from UNHCR. So she can they're the sort of gurus, the point place, the starting point when you're talking about this population. Suzanne, if you could just tell us a little bit about how big is the problem, and how does refugees and financial inclusion link together?
Sure. Thanks a lot, Craig. It's a huge pleasure to be here today. My name is Suzanne, and I'm leading UNHCR's work on refugee integration and inclusion in the Europe region. I would like to, before we jump into the topic of financial inclusion, I would like to give you an overall picture, as Craig just said. So you can see here the graph, which shows the development of forced displacement. And since 2011, basically the figure of forced displacement has almost tripled. So the figures that you see here are from our mid-year trends. We can also share the link afterwards so that you have the full publication here. But basically, although this looks terrible, it's not yet the full picture. So these are the figures as of mid-June. But since then, and by the end of September, the figure raised up to an estimated 140 million. And still, this does not include the conflict that erupted on October 7th in the Middle East. So the current figures are even higher than what you see here. The main drivers for forced displacement in the first half of 2023 include the war in Ukraine, the conflicts in Sudan, the Democratic Republic of the Congo and Myanmar, and a combination of drought, floods, and insecurity in Somalia, and a prolonged humanitarian crisis in Afghanistan. The next slide, please. So just to give you a couple of more global figures in this regard, because if you look at the media, oftentimes it says that all refugees are coming to the industrialized world. So just to showcase that we have 75% of refugees who are hosted in low and middle income countries. And most refugees don't move far, but stay in the neighboring countries. So almost 70%. And this figure of those refugees who are now in low and middle income countries decreased a bit because of the Ukraine situation. And it proves again that refugees go to the neighboring countries. Because of the Ukraine response, we now have a huge number of refugees who are, for example, in Poland. When we look at where refugees come from, basically half of them are coming from just 3 countries, which is Syria, Afghanistan, and Ukraine. And when we look at which are the main host countries, we have the Islamic Republic of Iran and Turkey, who are both hosting 3.4 million refugees. And then we have Germany, Colombia, and Pakistan. But we can also look at it from another angle. So how many persons in a country are refugees? If we look at Aruba, for example, it's 1 in 6 persons, or in Lebanon, 1 in 7. And if we are also taking into consideration the situation of Palestine refugees who are based in Lebanon and in Jordan, then we would even have 1 in 4 persons being a refugee in these countries. So as you see, the situation in terms of figures is really huge, and unfortunately, it continues to grow. But let's come to the topic of our session and how the issues is linked. So financial inclusion is really indispensable for forcibly displaced persons' economic survival in order for them to rebuild their lives and become an economic agent again in the country where they are at, and not being dependent on aid, which oftentimes is also insufficient for them to cover the basic needs. And it's also a crucial element for them to be empowered, become part of the host community where they are in, and also to contribute to the development of the host community. And at the same time, it can also help support access to durable solutions, whether it's the integration of the host country where they are at, an eventual return to their country of origin when return conditions are safe, or resettlement to a third country. Without access to financial services, refugees cannot be able to, for example, receive a wage, earn a salary through a formal employment. They cannot protect their savings, securely receive or send money, obtain insurance, or access credit. They need to start a business, validate their professional skills, or university diploma, or invest in their education and buy assets. Overall, if refugees don't have access to financial services, their contributions to their host community remains limited, and they continue to be a burden for the host country. So economic empowerment really helps them to be able to contribute to the host communities. And at the same time, financial inclusion also mitigates protection risks. So it reduces negative coping mechanism and can also decrease the risks of gender-based violence, trafficking, exploitation, and abuse. If we speak about, when we speak about what refugees' needs are for financial services, it's important to look at the different phases of displacement, because it's not that a refugee always needs the same financial products or always has the same needs. So basically, we have 4 different phases. The first one is the phase of the arrival, which really very much is linked to the immediate basic needs. So this includes, for example, the demand for survival cash, for housing, for food, for medical services, and often also the need to repay debts incurred during the escape. Then we have the second phase, which is the initial displacement, where people start looking at possibilities to generate an income, to access housing, education, obtain the local language in order to be included in the host community. And this includes access to a bank account for savings, for sending or receiving remittances, micro or consumer credit, and health insurance. Then we have the third phase, which is already when the situation in the country is more stabilized, and which we can, or we call also protected, when refugees will remain in the country for a longer period of time, and where they really try to make a better living and improve the situation they are in. And there, the financial services increase. So everything that I said before is still valid, but in addition to it, we can also add the demand for mortgage or home improvement loans, business loans, transactional accounts for cross-border payments, and remittances and health insurances. And then we have the last phase, the permanence, when the refugee basically has the same needs, financial needs, as the host community. So you can also add pension plans, credit, insurance, transnational services. And if we speak about those refugees who may either be resettled to a third country or return to the country of origin, there are also additional financial services in order to pay for the journey, to have transferable credit histories or transferable pension schemes and deferred annuities. Thank you.
Thank you. That's super interesting and a great way of sort of framing this in the context of how big the problem is, where the problem is, and possible ways in which financial inclusion can help to tackle part of the problem. Again, recognizing that this isn't a magic bullet, it's not going to solve all the problems, but it's part of the toolkit that needs to be there. I think it was really interesting to hear the different drivers. So we talked about weather-related drivers, you talked about conflict-related drivers, so causes, root causes of people having to flee. And then the different stages of their next steps. And there's different paths, right? There's paths where they go and then maybe go back. There's go and then become permanent, or maybe there's long-term protracted limbo land. So now back to Pakistan, Ashfaq. The cause in your particular case was a climate-related event, the floods that moved how many hundreds of thousands of people out of their homes. And then, so in terms of those stages, you're mostly working on those first two stages that Suzanne just talked about. Is that right?
Actually, we are working on 3 stages. Let me share with you and with the audience that Pakistan is a country which is struggling besides severe economic crisis, war on terror, and also with the climate-induced disaster. Last year in 2022, actually, more than 33 million people were affected, and out of 33 million people, around 17 million people were in the camps. So we can imagine that how they were living in the camps and what the life they were undergoing, and the pressures, gender-based violence, and etc. while being in the camps. But this is a regular phenomena in Pakistan. For example, in 2010, there were the super floods. So that we listened that terminology first time in Pakistan, that the 2010 were the super floods, in which only 20 million people were affected. But looking at the devastation and scale of 22 floods, there were 33 million people. So it is around 60% higher than the 2010 floods. And there were also floods in 2011, 12, 2020. So this is a regular feature which makes people quite vulnerable. And since these are hydrometeorological disasters, Pakistan is primarily a country which is posed to these threats. Though we have a very little contribution in the global emission, but when we look at the vulnerability index, Pakistan stands as 5th most vulnerable country, which faces the worst climate impacts. So it affects larger portion of people. And when it comes to the relief, recovery, and rehabilitation, our foundation, together with the International Rescue Committee, we assist people in relief, but with the resilience building lenses. I mean, we just do not transfer them the cash to use for multi-purposes, but use it in a very productive way so that they build their infrastructure, their resources, their livelihood assets, and etc. And then when it comes to the resilient rehabilitation, we provide them the cash grants through banking channels, through formal and informal banking channel, so that they can rebuild their houses. They can contribute in protecting the infrastructure, irrigation infrastructure, and livestock. since we do not have a robust mechanism of protection in livelihood resources. So these are the challenges with whom primarily the rural population is struggling with. So there are 3 stages in which we devise and implement our response together with the International Rescue Committee and couple of other NGOs and UN institutions. Yeah.
So it's the immediate relief with the cash grants,
Yeah.
and then the transition to back to their houses, or the resilience agenda.
Housing is one of a very fundamental social infrastructure that everybody needs to have. Since when we look at the topography of subcontinent, I mean the parts of India, Afghanistan, Iran and Pakistan, their housing structures are quite fragile. So whenever there is a flood, the housing structures cannot resist the extreme flooding. So they evacuate their native places and live into the camps. So that is one factor. Second is that they are dependent on livestock and agriculture, and these 2 livelihood resources are mainly vulnerable to the impacts of climate change. Whenever there is a shortage of water, irrigation in Pakistan, Afghanistan and parts of India, people face the extreme drought cycle. So they again migrate temporarily for 7 to 8 months into the and go to the barrage areas. So this is a kind of regular phenomenon. Yeah.
Okay. You know, it's interesting. A regular phenomenon. The focus should somehow be on preventing it from continuing to happen each time.
I think Hanadi actually pointed out one wonderful point to build a business case. Actually, what we are trying to promote and project, that climate is simply not a subject to provide relief and making people more vulnerable at the external aid, but building their resilience and building their confidence in a way so that they are more adaptive to the nature. They need to be resilient in a way how to build their overall social infrastructure. And there is a scope for the investment organizations, particularly the microfinance institution, to chip into this business and build their resilience. I believe that economic empowerment is a very fundamental aspect through which we can make these climate refugees self-sufficient, self-reliant in a way.
Excellent. Well, it's a good transition to Hanadi. So if you could use the experience that you talked about in Uganda to help us understand what the engagement was and what some of the results were. Unlike Ashraf's experience where he was dealing with Pakistanis in Pakistan, you're looking at refugees coming to Uganda from where?
So in Uganda, they come basically, they're fleeing conflict. So they come from Congo, they come from Southern Sudan, they come from Somalia, some of them actually that I met, they come from Sudan. And the complexity of this whole Eastern African region is that the languages are very different. Sometimes the cultures are very different. So it's really hard to go there and just be part of something by yourself. And in some countries, the policies are not really conducive. That's why we chose Uganda with UNHCR, because Uganda has friendlier policies for refugee inclusion. So you could work with the microfinance institutions to get them to serve refugees because they don't have to worry a lot about the KYC requirements, about the IDs because it's accepted, etc. So you have some kind of good potential to serve refugees, and that's why Uganda was chosen. I see that a lot of people, when we talk about these new markets, about fragility, people talk about the risk. I think part of the discussion, and I hope the discussion continues because next time it is the theme for this will be refugees. I like to look at it as an opportunity. It's not a risk. I mean, when we focus on the risks are so minor that if you over-focus on the risk, you forget that you have an opportunity. And this is proven in the numbers we had. For example, the MFIs, when they started serving refugees, they were very reluctant. Now, their portfolio at risk par 30 is less than 5%. Less than 5% is wonderful. You get this with your regular clients, basically. It was affected a little bit by COVID. Of course, it delayed the program a little. The par climbed a little, but they managed to reduce it again. Two of our partners are expanding to new markets. They're building new agencies to serve refugees without even us being involved. They saw the market opportunity there. The other thing is that first, when you start early, they're focusing on the client risk. Oh my God, they're going to leave tomorrow. Oh my God, they're very risky, they're very poor, they will not pay back. But when you start working with them, you see that, first of all, not all of them are the same. So not every refugee is uneducated, destitute, who cannot have a business. Some of them, one of the refugees, for example, we met is a chemist. He comes from South Sudan and he has a soap factory now. So he's actually in the SME category. So refugees are communities like all of us. They want to build their own business. Nobody likes to depend on aid forever. None of us. You can use aid for a while, but then you don't want to depend on aid. That's out. And the third thing that I think we make the mistake of looking at the client risk only, not at the portfolio risk. And if you look at it from a portfolio perspective, if you are an MFI with $1 million portfolio, and only 5% of your portfolio is in this market, even if all of this portfolio fails, you're still fine. But when you focus on the risk of the client only, it looks much, much bigger than it actually is. And this is what we noticed when we worked with MFIs. And the other part that's most important is also to help the microfinance institutions and the clients themselves with other services, non-financial services, business training the MFIs themselves, the staff of the MFIs, how to talk to refugees, how to work with refugees, how to build bridges rather than barriers, how to work with refugees and host communities so nobody feels excluded, which is very important. And lastly, it's also important for MFIs in some regions, in some areas, they can employ refugees who can actually serve as agents for these MFIs to take this business further. So in summary, it's an opportunity, I think, not at all a risk. The portfolio numbers that we have, whether it's on the growth, on the portfolio at risk, are even sometimes better than the regular portfolio. And financial education, digital use of digital technology, and supporting the MFIs and the clients is also very important.
Excellent. Thanks for that. Before getting to Miriam, I just want to bring my colleague Yusra Ahmed into this conversation. We're supposed to have another person on this panel from Iraq, but apparently it's really difficult to get visas if you're an Iraqi to come to Luxembourg. Even if you're an Iraqi government official, or maybe because you're an Iraqi government official, I wasn't clear if that was an obstacle or not. So the ILO has been working, well, I'll let you explain.
Thank you, Craig.
So
yes, okay. So hello, everyone. So the ILO has been working for in 10 different countries on this particular issue, forcibly displaced. Iraq is particular because we are talking about internally displaced population. Roughly, there are 250,000 refugees. There are 6 more IDPs. And I was looking, okay, at the highest of the situation in 2017, when ISIS, at the end of ISIS, there were 40 million internally displaced population in Iraq. So what we have been looking and trying to see together with our partner, the Central Bank of Iraq, is how to financially include, provide livelihoods, and help to economically include this population. One of the what we have realized, of course, is that the country, and this is also a trend in the countries where you find internally displacement, is that the countries themselves are suffering from political unrest, economical fragility, social fragility. So they are already, the overall situation is not extremely conducive for economic integration, not to mention financial integration and financial inclusion. So for example, when ISIS came in, there are many banks that had to close down the branches. Savings were completely depleted and gone. So the trust and the relationship between the population and the banking sector and the financial sector in general in Iraq was extremely, extremely low. The entrepreneurial spirit as well, because of all of these years of issues and of political unrest, also the entrepreneurial spirit was extremely low. So it was a quite complex situation that we had to work with together with the different partners. So we devised together with the central bank a financial inclusion strategy for hosts and the internally displaced population, as well as returnees, because there is also this term of people that after the displacement, they go back to their homes. What this speaks a little bit to also what Hanadi was saying. So we worked together through looking at the supply side and the demand side. So together with the financial service providers, the banks, so we have 3 partner banks, looking at understanding what is this population, having a market research, looking at their needs, looking at their realities, and then adapting an SME loan product for them. And then working with these SMEs and these internally displaced so that they are closer to the financial sector, so they trust more the financial sector. So financial education, entrepreneurship training. And what was extremely interesting, and I think this is also what the partner banks were saying, is that when the banks themselves were training this population, so the trust that was one of the big issues was established there. They got to know them, but not only that, but also they got to establish a rapport with them. So what I can say is that today, the banks, they have a portfolio of $2 million US dollars in loans for this particular population, with not 95% reimbursement rate, but with 100% reimbursement rate. And this actually created a complete shift, not only for the IDPs, but also for the overall market for banking serving the SME market in Iraq. So it is a positive externality. So there was an issue that the central bank tried to resolve, which is financial inclusion of internally displaced population, which also brought an external, a positive externality that is also providing and helping banks to understand the SME sector for the overall Iraqi economy.
Great, thank you for that. So just thinking about refugees versus internally displaced people and the different needs and challenges that may inhibit access to financial inclusion or financial services. Miriam, the work that AFI's been doing and your members have been doing to try to overcome those barriers. Can you just give some details about that?
Yeah. So like I mentioned in my introduction previously, more broadly, the central banks, their role is to create this enabling policy and regulatory environment so that people like my fellow panelists and their organizations can do their important work with ease. So there are 3 important ways that we do this. First is data. So unfortunately, in most of our member jurisdictions, and there are 33 of them out of that more than 80 I mentioned that have FDPs residing within their countries, the FDP population is essentially an invisible economy. The regulator does not see them. There is no data. So since we're the financial inclusion community here, I guess we're all familiar with the Global Findex database. You realize they don't cover FDPs. FinScope surveys in Africa don't cover FDPs. So this is something that we're trying to address so that our policies and regulations and the important initiatives are properly targeted and not just given mainstream products and services. because as we know, FDPs have very unique financial inclusion needs and also specific vulnerabilities when it comes to data protection and so on. So when we work with the central banks in our network, we promote the collection of sex and age disaggregated data so that there is a baseline and the level of financial inclusion of FDPs in that country is established. And we use demand side surveys, we use supply side surveys, and we do policy and regulatory reviews. And that helps us understand them better. And also helps the regulator understand who exactly is an FDP in their country. Is it a refugee? Is it an IDP? Is it both? Do we want to address both? Do our policies and regulations make sense for both, or are they very different? So it's very important that we address this data gap. We've done this recently with the National Bank of Rwanda, with the Ministry of Finance in the Kingdom of Eswatini, and the Central Bank in Mauritania. And now now that they've conducted sex and age data, they've done like sex and age data collection on FDPs in their jurisdictions. Now they're mainstreaming this process in their broader financial inclusion diagnostics and data collection exercises. So they're no longer left behind, and it's not just an add-on for FDPs, but they are included in the efforts. So that's one, data. Second is enabling customer due diligence framework. Hanadi also mentioned Know Your Customer. So an enabling or tiered CDD framework will allow, for example, the use of UNHCR ID to satisfy CDD requirements by the banks. Financial policymakers and regulators, they do this on a broader policy level. So they conduct something called money laundering, terrorist financing, and proliferation financing risk assessments that usually establishes or informs the tiered CDD framework in all our countries. So this is the way that you do it. And then that usually cascades down to the regulated entity or financial service provider. Now, it's not that easy because sometimes we do have a tiered CDD framework so that banks can say, okay, the refugee can use a UNHCR ID to certify to become onboarded. But usually, even with these flexibilities in the framework, FSPs or financial service providers are not motivated to use these because they fear that they will be fined. They fear that the regulator will get them into trouble or they'll lose their license because there's no regulatory clarity from the central bank. So that's another thing that we try to work on, creating that enabling CDD framework, but then providing that needed regulatory clarity and also incentive to that financial service provider so that they are encouraged to offer financial services to FDPs. Third and final point I wanted to share when it comes to central banks and their role in this is ensuring that digital financial services are properly leveraged to also include FDPs in the country. So like I said, 33 countries, actually only 6 of them really actively work on FDP financial inclusion now. But all their national strategies and policies for DFS or digital financial services, like their national payment strategies, their national fintech strategies, all of these currently are very silent on the issues of FDP. They don't, so, usually your financial service provider will look at the strategy and they say, okay, we're going to implement this. We're going to say we're going to take on what the regulator is telling us to do. We're going to implement it and offer these services. But FDPs are not there, even if there's a sizable population of FDPs in that country. So we go back to that data step that I spoke about. We collect that data, then we create this enabling framework, but then we also try to include them in all these other broader national strategies and policies for the citizens so that FDPs are also addressed. And when we do this as well, when we do the DFS part of it, the consumer protection and digital financial literacy bit is also included in that, because it's not enough to offer a mobile wallet if they're just going to cash in and then cash out. No, that's not financial inclusion to us. Financial inclusion is creating savings, is creating creating good financial habits, being able to create a credit history, access credit to start a small business, and so on. So it's not just a transfer, I go on and that's that. So I'll stop there. Those are the 3 main things that.
That's great. Thank you. So a lot of the basics are relevant regardless of whether you're targeting refugees or forcibly displaced people or sort of underserved communities, but there are some unique features for refugees. Maybe just shifting gears a bit and thinking about the different geographies. We've been talking mostly about developing countries, refugees from one developing country into another one. But Susanna's been working a lot in Europe, looking at refugees that are in Europe. And it would be great to hear how they're being financially and socially included.
Thanks, Greg. Perhaps just to say one thing first, that when we speak about refugees, there should not be an equation with camps, because we have been doing this a bit in the beginning. So just to clarify that refugees each time are living less in camps, and UNHCR is very much promoting inclusion from the onset. And if we're looking, for example, on the Americas or in Europe, refugees are living in urban settings and have access to services. Of course, oftentimes, unfortunately, not at the same level as nationals, but it's not that refugees are in camps, but they are really part of the society in the country where they are at. But looking specifically now at Europe, Mariam has already explained the need for an enabling environment, and also Hanadi, in terms of being able to access rights and services. In Europe, we have a rather enabling legal environment, a legal framework. So refugees and asylum seekers receive documentation from the governments. It's not an UNHCR ID, but it's coming from the governments. They have the right to work, and they also have the right to financial services in principle, though it's not always explicit. So not necessarily in the law, there's a direct reference to refugees or asylum seekers that they have the right to financial services, and this already creates some difficulties for financial service providers, because they don't really know what is the legal framework in this regard. So customer due diligence affects refugees, even in Europe, and especially refugees from higher risk countries. And with the increasingly restrictive measures, when we look at anti-money laundering and countering the financing of terrorism regulations, it is even the case that access to financial services of refugees is reducing in some countries, like, for example, in Serbia, where before it was quite easy for refugees to access bank accounts, and now it's getting each time more difficult. In addition, oftentimes the documentation is not recognized, because even if it's documentation from the government, the ID looks different than the ID of the nationals in many cases. So financial service providers don't necessarily know that this ID gives you the right to access financial services. In this way, again, refugees may be excluded because their documentation is not recognized. And this particularly affects asylum seekers, because in their case, it's even much more often that they have specific documentation. And in addition, oftentimes also financial service providers request a passport in addition to the ID in the country. And many refugees don't have a passport or don't have a biometric passport. And this again can create difficulties in accessing financial services. Of course, there are also very good initiatives, and the just released guidance from the European Banking Authority that specifically tackles the issue of refugees, and speaking about how refugees can specifically access financial services, and how documentation issues and also the issue of having a residency can be tackled in order to facilitate access to financial services, is a very good advancement. And we very much hope that this new guidance really trickles down and ensures that national banks support the access of refugees to financial services throughout the European Commission. But we are also speaking about refugees in non-EU countries where this is not necessarily implementable. So there is still much more to be done in the European region. We do have quite a few financial service providers and also national banks, NGOs and others who are quite active with regards to facilitating access to financial services. So many have, for example, translated the information on how to access financial services in the key languages that refugees speak in order to facilitate access. There have been campaigns, there have been engagement from the national banks in order to educate and build capacity of financial service providers in order to access financial services, and also from some commercial banks who really saw it as an opportunity and a business case to support refugees' access to financial services, but also sometimes as part of their ESG in order to ensure that refugees may be able to access at least basic bank accounts. But there's much more that can still be done in the region. And for example, setting a holistic framework for integration that also prominently features financial inclusion is something that can really help to support refugee entrepreneurship, because oftentimes the focus is only put on refugees' access to employment. And we do have a huge potential of refugees with an entrepreneurial profile. If we just look at refugees from Ukraine, we have 11% of refugees from Ukraine, as per UNHCR's last intention survey, that have an entrepreneurial profile. But at this moment, only 1% of refugees from Ukraine is running their own business. There's also the need to still enhance and increase awareness among the financial service providers in order to understand refugee issues, in order to also explain what is the business case and why it is beneficial to support refugee financial inclusion. Multilingual materials are still needed. So we have some good experiences, but still there's much more that needs to be done in the region. And as a financial service provider, you can also request assistance by the national banks in order to ensure that there are clear regulations with regards to CDD and how this can be balanced with refugees' access to financial services. We are promoting this from the UNHCR side, but we also need financial service providers to step in and also support this request in order to really facilitate a more enabling environment. The direct engagement with refugees is also key, because when you want to develop solutions, you need to make sure that it takes into consideration the profiles and needs and potential of refugees. And through a direct dialogue, it's much easier to develop targeted solutions. From the UNHCR side, we are also supporting in this regard. So if anybody is interested in looking how to bring in refugees in the solutions, we're more than happy to facilitate this. Offering business development services, as Mariam was saying, that are targeted to the refugees' profiles and also include information, for example, on the local context for newcomers, is very useful in order to really ensure that the business of refugees can be successful. Coordination mechanisms are needed with integration stakeholders. This way, financial service providers can also focus on their core business and don't have to take care of all the different issues that are relevant for socioeconomic inclusion, but can really work with the different stakeholders in order to have functional referral mechanisms that can help you to focus on your core business, while refugees are able to access financial services and also the other services that they need in the specific country. Training offline frontline staff is fundamental, because we have seen that oftentimes at headquarters level in financial service providers do have an enabling policy for facilitating refugees' access to financial services, but the frontline officer doesn't necessarily know it. So really ensuring that the policy of the company is understood by everybody who's working for this company, and this way also enabling refugees' access to financial services is fundamental. I think, Mariam, you mentioned also the hiring refugees directly in the financial service providers in order to also break the barrier, facilitate access to services in the right language, and this way overcome language barriers, but also understanding the business case and also helping the organization to understand new market opportunities is fundamental. It can also be useful to participate in networks with like-minded financial service providers to exchange good practices and lessons learned. And perhaps just in this area for the Europe context, we are working with a microfinance network where we microfinance institution where we do have a specific website also set up where you can find all information regarding to refugees financial inclusion in Europe. And we also have a working group in order to exchange good practices and lessons learned throughout the Europe region. In general, I would also like to say that it's really important that refugees are effectively included in your services. And studies show that repayment rates of refugees are equal to national. So it's really a business case, and it's not only something to do as part of the ESG. We do have several MFIs in Europe who are already providing financial services to refugees, for example, in Bulgaria, in Georgia, here in Luxembourg, or also in France. But rather than speaking more, I would like to show you a short video of an Afghan entrepreneur in France that speaks for itself.
Je suis sûr qu'un jour, je peux faire des défilés de mode, une propre marque. J'adore mon métier, c'est pour ça que j'arrête pas. Bonjour, bienvenue chez Palme Couture. Je vais vous faire visiter. Entrez. Vous essayez? Ouais. Au niveau de carreau, un petit peu garant pour toi. Moi, j'ai eu un grand atelier en Afghanistan. J'ai travaillé avec 12 personnes. Quand je me suis arrivé en France, je demande d'asile. Il y en a des jours qui sont très, très difficiles. Il y en a des papiers que moi, je ne comprends pas. Moi, on peut ouvrir un atelier, un atelier de couture, un auto-entrepreneur, par exemple. Je suis allé à l'ADI, j'ai expliqué toutes mes difficultés dans mon atelier. Il m'a accompagné, j'ai pris prête à l'ADI. Il a accepté tout de suite.
L'accompagnement, le financement des réfugiés, ça fait un peu partie de l'ADN de l'ADI. L'ADI, c'est l'Association pour le droit à l'initiative économique. Chaque année, il y a trop de personnes qui sont empêchées de créer leur entreprise parce qu'elles n'ont pas les moyens financiers de le faire. Et donc, l'ADI, chaque année, permet à 25 000 personnes de créer leur propre emploi.
Pour les gens qui arrivent maintenant, c'est trop compliqué de quitter notre pays. Il faut patienter et rêver.
Great, Suzanne. Thanks for that. So it does help to illustrate this image that we shouldn't be thinking about the camps. We should be thinking about, well, certainly the heterogeneity of refugees. They come from lots of different backgrounds, lots of different experiences, and many of them have the potential to start their own jobs if they're given, or start their own businesses if they're given opportunities. And so seeing how we can facilitate those opportunities. So that's a great example. I want to just start with asking a couple questions, but you can also be thinking about questions that you might have. So we've identified a number of challenges. We've talked about the ID problem. We've talked about the perceived risk of this target group, the need for sort of financial and non-financial services to go hand in hand. What are some of the other challenges that you want to highlight that we haven't maybe emphasized enough?
I can make a start if that's okay.
You want to do what?
I can make a start.
Go for it.
Yeah, and I think one that's Suzanne alluded to, one underlying cross-cutting challenge that we've seen from a policy and regulatory perspective is multi-stakeholder, multi-sectoral, and multidisciplinary coordination. In the 6 countries that we're working in now, it was not intuitive for the central bank to reach out to UNHCR, for example, or the line ministry dealing with forced displacement to understand what is the problem, who are the FDPs, why are they financially excluded, what are their financial inclusion needs, what is the business case. So this was all missing there. And coordination, I think, is so, like, we talk about it a lot, but I think it's so underestimated what impact it has when it comes to making meaningful change for FDPs and their financial inclusion. It's expensive, it's laborious. Everybody needs to be motivated to coordinate, but it makes such a huge difference. For the data collection bit, the central bank didn't know where to start, but we worked with the UNHCR in all the countries, and they shared with us where the FDPs are, how we could engage with them, how the central bank can also talk to them and understand firsthand what exactly are the barriers to their financial inclusion. And also creating that business case. So I was in a workshop with the National Bank of Rwanda, and a lot of the FSPs at that time were arguing, and there was a lot of friction and heat in that room at the moment. And they were saying, yeah, but why should we do it? They don't repay loans. But we had data that from UNHCR that showed that actually their loan repayment rates were higher than the locals. And we were able to share that. And then the FSPs became a bit more relaxed. And we just got to hash out all the problems that we had, the perceived high risk, the lack of data, flight risk, non-profitability, that all changed in a one-day workshop. And we continue now that coordination and having a coordination mechanism to keep that information flow going, to share problems with each other, to build trust. I think it's really important.
Excellent.
Yeah.
Ashok, you want to go next?
Yeah, I think there is a need to give confidence to the financial institutions, MFIs, that the FDPs is not a silent sector, and they are quite trustworthy to invest with because MFIs feel a risk in providing a loan to these FDPs because of they fear that there won't be repayment from these FDPs. So this is the critical area which I believe can be addressed through the collaborative mechanisms if there are some policy covers by the respective states, governments, which can give trust to the business community that they should invest with the FDPs. That is one thing. I think there is a need to have a paradigm shift from conventional banking to the very humanitarian banking for when it comes to FDPs, because they need to see and treat the cases with humanitarian lenses. Government should also do some social safety net initiatives and other things.
So humanitarian banking is a new one for me.
Yeah,
I like
me
that
too. That's-
terminology. We're gonna have to figure out how to define humanitarian banking, but it looks like that could be fun. Hanadi, did you have a challenge that you wanted to highlight?
Sure. I think two main challenges, one misconception and one challenge. When we talk about MFIs and about financial services, we jump immediately into thinking about loans. It doesn't have to start with loans. It can start with savings services, which is less risky for MFIs. So you can start building a relationship with a client through savings, not necessarily through loans, if you're a deposit-taking institution. That's number one. Number two, when it comes to investments, there are multiple roadblocks when we start talking about fragile markets, including refugee markets. The first stumbling block is that we want the MFI to trust the refugee market, but we often don't trust the MFIs themselves. These MFIs, they know their business very well. They know how to do their own due diligence. So when we put too many conditions on the investment, we're actually tying them up instead of letting them explore and build their own thing and buy into it. So this is one important thing. We want them to trust the market. We want them to trust us. We need to trust them as well. It goes both ways. The second level is for, I'm sounding like a broken record now because I keep repeating this. Investors and government funders and all types of funders need to look at this from a different perspective. For example, when we talk about funding terrorism and anti-money laundering, it's actually good to fund bringing those people from informal to formal sectors, because when they are part of the formal financial system, you can monitor them better. It's more transparent. So you have, everybody has an interest in investing in this market, whether from a anti-money laundering and fighting terrorism perspective, whether from reducing the humanitarian assistance burden, whether, like Suzanne said, on the local government or the international community as well. We cannot provide aid forever. And thirdly, from an integration perspective for those refugees into their communities, because believe it or not, permanence level, the permanent step, that Suzanne mentioned is really a thing. Some people stay 30, 40, 50 years. Some of them don't want to go back if they build a business in their countries. I spoke with one Sudanese refugee in Uganda, and she now has an NGO, actually. She's an activist for refugee financial inclusion. And I asked her if she wants to go back to Sudan. And she said, well, I raised my kids here. I have nothing there. I go visit, but I want to stay here. So this is very important as well for us. And the third part is always, when it comes to innovation, when it comes to fragility, we have, as Mariam mentioned, to work together, the humanitarian side and the development side, because we talk a lot about the humanitarian development peace nexus. Well, this is a real implementation of that. So if we look at it from this perspective, we want people to move to more sustainable access to services all the time, and formal access to services, because it promotes transparency as well.
And one additional element, perhaps, I agree with everything that has been said, but perhaps it's also important to put more focus on inclusion really from the onset. because oftentimes access to financial services or to socioeconomic inclusion comes too late. And we're really using time and potential of refugees. If you're in a situation where you're completely aid dependent for 1, 2, 3, 4 years, then it's much more difficult to be able to be empowered and be able to contribute to your community. So it's fundamental to really start from the beginning, perhaps not in phase 1 where we really have the humanitarian needs that need to be covered, but as of phase 2. So after a couple of weeks, we should really start looking at inclusion. How can refugees be empowered? How can they be part of the economic ecosystem of the host community in order to be able to contribute and also being able to rebuild their livelihood?
Okay, good advice. In terms of innovations, things that are helping to overcome some of these challenges, is there anything that you want to highlight that you want to let people know about?
Yep.
Yeah.
I think there is a scope for business community to invest in the climate subject. What we have been witnessing or seeing that usually climate financing is limited to promotion of the solar energy, but there is a great scope in investing in the resilient infrastructure building in climate sensitive areas. There is a scope to invest into the solid waste and using waste for the recovery purposes. And there is also a scope for the business community to invest in the organic input, agriculture input market. So diversifying market is something which the business community and this financial sector can look at.
Okay, good. Anyone else have anything they want to highlight?
I think just to go back to the financial literacy and digital financial literacy bit, because where there is actually high inclusion of FDPs, especially refugees, we find that it's through mobile money accounts. But again, it's not enough just mobile money accounts because they have very limited functionality. So thinking about online banking and digital banking, that should come with digital financial literacy programs. And we've seen a lot of innovations from humanitarian stakeholders, actually, like the IRC and the private sector and the GSMA, for example, where they've developed lots of digital financial literacy programs where FDPs can actually learn much better how to use different digital financial services. And I think that's something we should keep working on.
Okay, so interesting sort of connection there between the digital finance world and the refugees problem or issue. I'm happy to open it up now to questions from the audience.
Sure, and we'll start with a question from the online audience.
Oh, excellent.
So it's a question from Laura Cordero to Hanadi. Did FSPs in Uganda introduced any specific risk management measures at client assessment phase under your pilot? For instance, use of alternative data as a complement or other adjustments in the credit appraisal process or in product features?
Yeah, thank you. No, you would be surprised, actually. They use their own usual operations. There was no need to use a special type of things except to adapt a little bit the way they do their application process and their assessment of the refugees. So there wasn't something like that has been invented in order to tackle this population.
But hiring loan officers from the community seemed to be a pretty
That's, I
interesting-
mean, I experienced it personally. It helps a lot, and it makes this community feel that it's valued as well. So it's not only people, strangers coming to them and lecturing them all the time, it's their own people, and it helps a lot building this sense of trust with the MFI.
All right. Other questions? Anybody have something? Yes, over here. That would be helpful. Sure.
Hi, good morning. Thank you for a very engaging panel. Question is maybe a couple of comments in a question. Do you guys see any innovation from the side of the investors and microfinance investment vehicles, asset managers, DFIs on this topic? Are they giving the FSP the right product with the right covenants in order to on-lend to the refugee clients? That's one. Second, perhaps Hanadi has already mentioned this, but can you again touch base on the KYC process from a refugee standpoint, because they're gonna lack of a national ID in that country where they are moving, and how do you go about that? And third is one of the key 101 microfinance classes at the beginning of onboarding a client is stability of business and track record of business. You want to make sure someone has been doing that job in that bazaar or market for a period of time and they have a stable residence. Two factors that are not here, obviously for obvious reasons, apparent. How do you go about that? Thank you.
Thank you. Excellent questions. Hanadi, you want to start with those?
Yes, on the know your customer, on the KYC, and specifically on the ID thing. In some countries, you just cannot work. In some countries, you actually, in Lebanon, it happened. You can work despite the policy not being there. You kind of, because it's a gray area, you can fly under the radar, but you cannot actually expand too much. But in countries like Uganda, you have the policy in place and you have government who's encouraging that. So it helps the MFIs a lot in doing their know your customer, due diligence. On the investor and the business sides and the entrepreneur, first of all, not everybody is an entrepreneur. So we have to accept that. Within the refugee community, not everybody is an entrepreneur. So you have to ask it. You have the job creation and you have the entrepreneurship. And this is one of the things I was mentioning about not tying up MFIs too much. Where did this last dollar go to serve who? It's very hard for them to understand the market if we put too many shackles on them, if we don't let them do their work. And when they do their work, they can actually segment this market pretty well. For example, in our project, what we did is we asked for targets on non-financial services and financial services. So not only the number of clients, but the number of people who were part of the training sessions, part of the digital literacy sessions, because it helps a lot in developing this market as well. From the investors and the DFIs, sadly, I mean, they're all interested, which is really heartwarming, because a few years ago, they would not even listen to the refugee issue. They're all interested, which is great, but I think they need to step out of their comfort zone. You cannot have a risk matrix and you hide behind it and you still want to do innovation. It doesn't work. You have to risk, you have to take more risk, and you have maybe to adapt your risk matrix a little bit. It's fine, like you mentioned yesterday, if you get to 7-8% par in some particular market, you don't have to be perfect. Exactly. So, yeah.
And in terms of the recognizing their experience from their home community, that if they'd been running a business somewhere else, then you just want to take that into consideration.
Yes.
Like the example from the video, he had a business in Afghanistan, 12 employees, whatever. Excellent. All right, I want to wrap up by asking each of you if there's any recommendations that you have for any of the stakeholders in the value chain, sort of really short, sweet, to the point, make it strong, powerful. Let's start with that end.
I think it goes back to the collaboration and coordination bit, because again, it's not intuitive for us to coordinate with each other, really. I think for people here in this room, yes, it is, but at the country level, it really isn't. So from a policy and regulatory perspective, please don't be afraid of your central bank. Please go up to them with your data, with your humanity, and tell them, look, this is what we have. These are the FDPs in our country. They're not a burden. Let's include them and let's give them an opportunity to contribute. So I think that's
excellent
takeaway.
Hanadi?
For me, it's sustainability, sustainable access, not only access. Access is great, but when you give people access to something within a project and the project ends and you just take this access away, it's actually worse. It puts people in a more drastic situation than they were. Sustainability is key, sustainable financial services. That's why working with local entities, with MFIs, even if you have an international project that comes to the country, try to link it to MFIs, try to build bridges with the local.
Okay, back to
MFIs
building bridges.
Build bridges.
All right, Ashfaq.
I think to bring FDBs in the financial net, there is a need to enhance and build the entrepreneurial abilities of the FDPs so that there is a trust of MFIs to loan them and build their resilience against the shocks.
Excellent. Suzanne, last word is yours.
So I think it is fundamental that you don't start from scratch. I mean, you have seen there are so many experiences already out there, so many good experiences and also lessons learned that you can build upon. So don't start from zero, but connect with those who are already working in this regard and help contributing to building the global business case in this regard. And also support monitoring and evaluation and the sharing of good practices. I think there's much data out there, but we still miss quite a bit of data. So also bring this to the attention of the national banks and the regulatory bodies and the national governments in order to really obtain the disaggregated data, be able to segment the right clients and be able to develop the products that are needed in order to enhance financial inclusion. Thank you.
Excellent. Well, in terms of sharing experiences, that's going to be what the European Microfinance Platform is going to be doing over the next year, because this is going to be a high priority for the network. And hopefully this time next year, you'll have lots of experiences on this topic to be able to learn about. In the meantime, you got to join with me to appreciate this wonderful panel.
Thanks, everybody.
Well done. Coffee break.